UK CPI slightly beat expectations, 5.5%. What drove it? I mean, slightly 5.5 against 5.4. It wasn't a massive beat, but I suppose it's still a beat, isn't it? It's still higher than the market had been anticipating, and that has been the recent direction of travel.
Exactly. The markets thought that inflation was just going to plateau, but it accelerated, and it's a new 30-year high again. It was driven by clothing and footwear sales. The discounts were less than in any year since 2005. Also, the same old story, second-hand car prices, energy prices, but partly offset by restaurants and hotels and transport. But it piles pressure on the Bank of England to go more aggressively at the next meeting in March. And if they go for 50 basis points, which they came very close to last time, with 4 out of the 9-member Monetary Policy Committee voting for it, it would be unprecedented in the bank's independent history.
Good morning, Lizzy. Bailey did take a lot of flack for saying workers shouldn't ask for pay rises, which I think is quite interesting in a context of how much he gets paid and his pension linked to inflation. But will public anger increase yet again, given those inflation prints we've seen today, and kind of affect his plans for hiking?
Well, as Andrew Bailey keeps on saying, there's a time lag in monetary policy and how long it takes to kick in. It's about a year to 18 months. So he can't help this short-term, immediate cost of living crisis. But if the bank is aggressive about tightening and front-loads the hikes, maybe they can help to calm worries about inflation, stop expectations getting de-anchored. And that's presumably, what Andrew Bailey was trying to get across when he said that, but he wasn't asking companies to rein in their protection of their margins. But it's where the spotlight falls back onto the Chancellor Rishi Sunak, because there's already protection for the poorest households from these energy bill rises, tax rises, but you've still got the middle-income households who will face both, on top of the impact from the interest rate rises, making their debts and mortgages harder, more expensive to service.